So traders, check this out. I've been looking at this Dow Jones chart. You can see this actually the Dow Jones chart. I can go all the way back to the 1950s and check this out here. We actually had a very big strong bull market through here, but look at this here. Oh, look at this. We're talking about like 2 decades of a bear market through here. Look at this, from 1960 to 1968. I've also been looking at the fear and greed index as well too. I've also been looking at the stock market itself from the Nasdaq and the E-mini perspective, and specifically I've been focusing on the S&P 500, and I've been doing some analysis looking at extensions, Fibonacci retracements, and so much more. And just by doing some simple analysis, we actually have a target up here of 7,500. We actually could be getting ready for a face ripper rally, and that's exactly what I want to share with you in today's video. So that's exactly what I want to share with you. So here's the big thing that I want to see with you here. One of the big things I'm noticing right now is what? What is the big thing that's happening right now across a lot of people? And it's I'm seeing a common theme around all these markets for me, right? And if you've been around the markets for a few years or more, then you would know what I'm talking about, right? The thing is this: we're starting to see the recession word, aren't we? Everyone's like recession, recession, recession. But what happens when most people are saying the same thing? The opposite happens in markets, right? We just know that. Because the exact same tonality, the exact same things, the exact same headlines, the exact same... There's always something to be fearful about, right? So I'm actually, firstly, I had a 7,000 target on the S&P 500 by the end of this year. I'm actually raising it to 7,500. Why? Because it's just extensions. I'm going to go with the extension number. But check down here. Right down here was what? Right down here was when so many people were saying recession. So... And it's the exact same feeling and the exact same thing. I'm like, hang on a minute. There's a lot of bad news, so-called bad news. There's always a lot of bad news in the markets, right? There's always wars. There's always inflation. There's always Trump. There's always, tariffs. There's always something. But how come the market just keeps going up? But this time's different, right? And then the market makes a new high. It's like, hang on a minute, what's going on, right? And the purpose of me saying this, guys, is that please don't shut yourself off to what could be one of the greatest rallies we're going to see in a very long time. Because if this is going to be the final rally before we go into recession, and yes, we are headed into a recession, but the final blow-off move before the recession starts, we could be getting ready for that. And it's on the books here right now, and we're getting the exact same analysis here from a swing up, swing down, retracement, swing up, swing down, retracement, and so on and so forth. And the big thing I'm actually looking at this from, I'm always looking at this from a perspective of looking at the overall big market view, right? Because it's always... We always get sometimes trapped into this here. Right? A lot of people get trapped into, and I used to as well too, all they'll focus on is like, oh my goodness, John, look at this down move from here and so on and so forth, right? Oh, by the way, guys, bit of a quick short little tip for you guys, right? Lower highs are downward trends, right? What happens if we come down, make a higher low, and then break up? That's now what? Establishing a new upward trend, right? Because lower highs are downward trend. If we rally up, come down, form a higher low, and then we start to break above here, if we start to get this scenario, guess what? The buyers are coming back in. There's a new trend, new upward trend being established. And if we get that, we're probably going to be breaking this downward phase through here. Let me do that again for you, right? This whole downward phase from here, we're probably going to hold, break up, break above this level 3. If we get something like that, guys, get ready for a face ripper rally. Now, again, yes, I do believe there's a recession coming. I do believe there's something coming down the road. But in the mix of all that, remember, the market can do the exact opposite of what you think it can do. And one thing I've noticed time and time again is this. Check this out. Through here, we're getting the exact same situation from here. So I'm looking at the Dow Jones chart here, and I'm looking at the longer term picture here. I'm looking at all these. We had a big move up, and look at this here, very big move up. 19 there, big spike, big crash. Then look at this bull market, right? Look how big this bull market was, right? We're talking about we went into a very big bear market, right? Oh, by the way, guys, check this out. This is where I love this stuff, right? Look at this here. So whenever we're making higher lows, look at this here. Low, higher low, higher low, higher low, slight lower low, higher low. Whenever we make higher lows, we're in an upward trend. And look at this here. As soon as we started the switch, this is a monthly chart, by the way. Lower high, lower high. So this here is just, it's amazing. Anyway, so we can see, look at a very big secular bull market, but I'm focusing more on now on what I'm looking at here when it comes to these markets from here, right? So I'm focusing more on this here, right? Check out. Look at that. This from the bottom low from the 2008 financial crisis low point from there, we got this low point from here, bam right there, bam bam, and right there as well too. And right here, guess what? Right here is at. Right here is where what's happening right now. This is right now. Obviously, looking at the Dow Jones, looking at the big monthly charts, and we've probably got a whole bunch of support coming through here as well too. We're making significant lows, higher lows, higher lows, higher lows. Yes, there's a recession coming. We know that, right? But is the recession going to be next year? Is it going to be 2 years from now? Don't rule out that this is just a short-term shake and bake and we're going to get ready for a face ripper rally and miss out on some amazing opportunities. So I don't want you to be like, nah, that's definitely not going to happen, John. You're an idiot and so on and so forth. No. Hey, don't shoot the messenger. I'm just sharing with you what I'm seeing right now, right? Because there could be so many amazing opportunities. Now, by the way, guys, there's so many opportunities on the bullish or bearish right now. Right? If the stock market does go up or gold continues to go up, and maybe the oil and energy sector goes down, whatever, right? There's amazing opportunities all over the place, right? If you don't know what you're actually looking for, then you need to know what you're looking for, right? First link in the description there, guys. I've actually got a presentation, a video that I've just recorded, sharing with you all the details to my trading system, my trading setup, so you can learn that. So if I'm going back to this level here now, and I'm going back to the S&P 500. Now check this out. This is where it gets so awesome, right? Using simple Fibonacci extensions, right? Fibonacci extensions here. Check this out. This is where it gets like, I'm telling you right now, guys, we could be getting ready for a face ripper rally to the upside. And oh my goodness, I am so excited. There's going to be so many amazing opportunities just underneath our feet. One, just stay flexible, right? Yes, this may not happen. We could go down. Who cares? We could get ready, but I believe we could be getting ready for a big face ripper rally, and let me show you the reason why. We've had a very big move from here to here, but check this out. This is how cool this is, right? We go Fibonacci retracement. If we go from low to high, look where we actually found support, right here. Look at this here. Absolutely amazing, right? Came down right to the 50% level, which was this low to high, bam, bam. And then look at that, we had a very big move. Now, where do we have what move do we have? There's the Fibonacci retracement. Now let's go to the extension, which is we break it from the low, we go from the high, bam, and then we actually bring this down now to the low point, and look where it actually got to. See this here? So I measured it from the low point, the high point, to low point, and you cannot believe this, right? This is just pretty magical. Oh my goodness, check this out, right? Where'd you go? From here. Right, there. Look at this, right? Now we're going to bring this over to here. Let's check this out. So low to high, then we came down. That was 50% retracement. Look where it actually came to. It came right to what? Smack on 1-to-1. You cannot make that up, right? That is absolutely just beautiful. And again, I'm measuring from this low here to this low here. So as you can see from there. So what I did do is just recently, just to find out what's going on right now, is I did the exact same thing in the markets. And check this out. This is where it gets so cool. Right? This is from low to high. Look where we're at right now. Look, right at that 50% retracement level, right? Right at that level there, 50% retracement and a long-term trend line coming up. So if the exact same thing happens, which we can, right, in this very big bull market, now remember, if I bring this over here, remember, this from low to high, that was the 50% retracement. The 1-to-1 extension was up there, right? Remember that? Now we got what? Low to high, come down, 50% retracement. This here is the exact same thing over here. Now, by the way, the herd mentality is doing the exact same thing here too. Recession, crash, oh my goodness. We also have the fear and greed index. Oh my goodness, so much fear. Get ready for a slingshot, right? Face ripper rally, here we go, right? So now check this out. This is where it gets so awesome. So I'm doing that through here, and how I got this 70, I've actually got a 7,000 target. I was being conservative. I actually should raise it to 7,500 now. Why? Using simple extensions is that if we continue this overall big bull market, because we are still in a very big bull market from here, right? If we go to the extensions, and we go from low to high, and then we actually bring this extension to the downside, which as you can see, what I'm doing is I'm just measuring this bit through here, as you can see, right? So that's that low bit from there. Let me just make sure it's on there, right? And then if I bring this up, if I squeeze this up, look where it actually gets down to. This whole 1-to-1 extension, this O&D target that I have here, it's just a short abbreviation for what I'm looking at here, the O&D target. It's like this is what we could be getting ready for, guys, right? And so anything can happen. So just keep an eye out for this here, guys. This here tells me, and I'm just looking at this overall market. I'm looking at the sentiment right now. So much fear, and crashes don't happen when most people are fearful. When everyone's saying that there's a recession coming, and oh my goodness, this is so bad, and people are worried, the market tends to rally. The market tends to rally.